What's up, everyone? So today we are talking about different ways you can trade with supply and demand. See a lot of people talking about, you know, mm, order blocks and whatever. Supply and demand is order blocks. It is the same thing. So let's cover different ways you can use supply and demand. I will tell you my way, and you can choose if you want to use the same strategy, the same way I'm using, or if you want to just use it in a different way. The concept is the same. The way to use it is slightly different, but supply and demand works the same way. So let's get started. You saw already the supply and demand webinar where I tell you how to identify good supply and demand areas, that they need to be fresh, and so on and so on. Now, as you know, I'm doing this on 4 hours and 1 hour, and I'm trading fresh areas. So for example, this supply area, this demand area, let's see right here, this demand area right here. And these are all fresh areas because they were never tested before. So this is the first step. Then what I do is that not always, of course, I don't always need to have the Fibonacci's, but if I do have Fibonacci confluence, then even better. It is an extra confluence for me to enter the trades. So for example, let's see right here if we have it or not. Right here, I don't think we have it, but this is a good supply area. Now, in other cases, we do have Fib confluence where the supply or demand corresponds to our Fibonacci's, and that's even better for me. Now, this doesn't mean that you need to use Fibonacci's. I don't even use them 100% of the times. Like in this case, I would consider GP, JPY sells, even if we don't have Fibonacci confluence, all right? Now, another thing which I recommend you to do and will be very helpful is to mark out the 50% of the order block, the supply or demand area. And that could be if you don't want to, if you don't want to use the 1 minute strategy and wait for Wyckoff and just go crazy on the 1 minute, you can just try to enter at the 50% of the order block of the supply or demand area. There are two ways to enter. One way is at the open, at the lowest side for supplies or the high side for demands, or you mark the 50% of the areas, and you enter at the 50%. That's a very good way, and you can even split your two entries. You enter with half right here, half at the 50%. You enter, and as you said, stop loss above the supply or below the demand, and you're targeting next areas. So for example, these lows right here. Of course, you can target even lower, but if you're happy with a 1 to 5, you can trade it like this. Now, this is one way, 4 hours, 1 hour. In this case, we don't have Fibonacci confluence. When we do have Fibonacci confluence, it's even better for me. And this is without going in the 1 minute. Now, the next step is if you want to, it is not necessary. I have a lot of people in the group, a lot of students just trading with supply and demand. Some are using also the Fibonacci's, some are not. I personally really like the Fibonacci's. If I do have Fibonacci confluence, it is even better for me. If I don't, there still could be a trade that we enter if it is a good setup. Now, as I was saying, 1 minute strategy and 1 minute entries. It is not necessary. A lot of students in the group are not using the 1 minute entries. They're just using supply and demand, Fibonacci levels, or just supply and demand. And we mark a structure, of course, that's the first step. And if you want to, if you have time, if your schedule, if your routine allows you to actually, stay a lot in front of charts, then you can go on the 1 minute, start looking for possibly Wyckoff. So for example, we have bank climax, automatic rally, secondary test, we have a spring, and then continuation to the downside. All right, so you can start looking for this if you have time. This is not necessary. Of course, you could get better entries, but you will be a good trader already just by using the supply and demand strategy with the correct risk management. Sorry for all the noise. With the correct risk management and with Fibonacci's if you want to. And of course, by following the trend, never going against the trend, at least the majority of the times, you can of course try to catch some reversals. Like in this case, this will be some type of reversal. You could take your chance if you have a very good risk reward ratio. If not, stick to following the trend. All right. Now, another thing, and this is one way to use it, and I already gave you many options. I know it might get confusing, but the purpose of this course is to make you an independent trader, and there is no reason for me to give you only one way of trading my strategy, because of course there are many ways of trading my strategies. Those are the concepts, and then you need to choose what is working for you. So do you want to use the Fibonacci's? Yes, no. Do you want to use supply and demand by itself or with the fibs? It's up to you. Do you want to use the 50% of the demand or supply area? Well, I recommend you to, so this is not really a choice. Yes, you should use the 50%. Now, I'm trading 4 hours and 1 hour. What you can do is trading on the 5 or 15 minutes. So let's see. 5 and 15 minutes, you have, of course, sorry, supply right here. But of course, you can see if we are trading market structure, we see a break of market structure right here. This is a breakout of the previous structure right here, as you can see. Breakout to the upside, retracement. This retracement is retracing to this demand area. We mark the 50% of the demand area. Perfect. Let's put also the fibs if you want to. If you don't want to use them, that's fine. You don't need them. Let's put the fibs. In this case, we don't even have confluence with the fibs. We didn't really touch it. But anyway, and in this case, the fibs wouldn't be helpful. This is a good example when you can, avoid to use them. This is a trade that I will take. If I'm trading on the 15 minutes, I will take it. So you see a breakout structure, a retracement. Your retracement is to a demand area, and it is the only valid demand area of this push with, the base and a big push to the upside. It was fresh. We're coming back, testing the 50% of that area, and you can enter targeting the next supply. So you enter at the 50%, stop loss just a bit below it, and take profit before the next supply area, 1 to 5 risk reward ratio. So there you go. There are many ways. You can use lower time frames, you can use higher time frames. If you do use lower time frames, what I recommend you to do is maybe start analyzing on the 1 hour and then do your entries and start understanding the market structure on the 1 hour or 30 minutes, and then take your setups on the 50 minutes like this one. All right. Instead, if you want to do like me, I'm trading 4 hours and 1 hour with supply and demand, fibs, and everything you always see. Also, the 1 minute strategy, yes, the 1 minute entries, not always, but I do check the 1 minute once we reach our area. So this is all. Just wanted to do, a quick parenthesis. Seems like, sometimes people think that I'm teaching maybe only one way to trade instead of, thinking about the concepts and taking the concepts and applying them in the way you want to apply it. There is no one way to be a profitable trader. There are many ways. There are many ways to lose money. Of course, there are many ways to be a profitable trader. Now, with these concepts, you can use them in different ways. You can use them the same way as me by looking at the videos, basically using my same strategy, or you can modify them a little bit, use them on different time frames, use them maybe with, I see a lot of people in the group. Well, I don't use indicators. I'm not a fan of indicators, but some other people in the group maybe are using moving averages for confluence with the trades. And therefore, if it works for them, you can use it. All right. This is all I wanted to say. I hope you liked it. I hope you understand my point. I hope that it makes more sense now that you're seeing, different examples on how to apply the strategies in different ways. And I'll see you on the next video.